What's going on, everyone? It's Nick with Us versus Herd. If it's your first time here, like the content, hit subscribe if you want to get notifications from when we go live or post videos like these. Tap the bell. And if you want to join the UvH fam, our Discord, and our free options trading group, the link is in the description. Got a lot of ground to cover. We're going to be getting ready for the week ahead. It is currently Sunday night or Sunday morning, wherever you are, where you're watching this. My intention for these videos is to really just get our mindset, get prepared, and understand where the week is heading, so that way we can go in Monday kind of with a game plan, rough plan. Obviously things change, but it's also, for me, this is kind of part of my routine, part of my ritual, where I go through, get my mind right, get ready for the week. Let's get trading. Let's make money. You know, you got to be, if you want to make money in the market, you have to be prepared. And this is one of the things that I go through. So I just wanted to share it with you, kind of some of my thoughts, bounce some things off you. You know, if you agree, disagree, leave a comment below. Definitely want to know, kind of where you guys are at in terms of trading, in terms of some of these ideas, and also kind of what I'm thinking of what's going to happen this week or what to be on the lookout for. You know, we had a pretty volatile last few days in the market, Friday and Thursday. You know, we had a lot of pop and drops in the market, a lot of pump and dumps, and things are pretty crazy. I mean, the things that happened last week were, the Fed cut rate. So Fed week we already knew it was going to be crazy. It was also quad witching week, quad witching on Friday, and then we had trade news on Friday as well. Trump did give a press conference, and he was saying, it was kind of interesting. He was with the Australian PM, and he did a press conference with the Australian PM, and people were asking Trump about the China deal. Which is kind of weird. I guess that's what people want to know. They pretty much ignored the Australian dude, and they were pressing Trump about China, and China said that he's not looking to make a partial deal. He's looking to make a full deal, and he doesn't think he needs to do it before the next election, which means he's not in a rush. And after that, then all the people that were from China in the U.S. meeting with different decision makers and people here, different farms and all that kind of thing, they pulled out. They said, you know what, I'm getting out of here. See you later. We're cutting our meeting short. Or for some of the U.S. officials, we're not even going to meet at all. We're bouncing. So they were. It was the weirdest thing. So I think that we are still set to meet with China. Trump is set to meet with, or someone at the White House. Nothing is set yet. Is supposed to meet with China to talk trade in October. So I guess we'll see what happens. Another interesting thing that I've been looking at here. I don't know if you guys have looked at this. This is I'm at the federalreserve.gov. This is their balance sheet for their assets of the Federal Reserve. And if you haven't looked at this, it's pretty interesting. The Fed has been pumping money back into the market. It says, since the beginning of the financial market turmoil in August 2007, the Federal Reserve's balance sheet has grown in size and has changed in composition. Total assets of the Federal Reserve have increased significantly from $870 billion on August 8th, 2007 to $4.5 trillion on January 14th, 2015, and have been declining since the beginning of the FOMC's balance sheet normalization program in 2017. So I don't know if you guys remember this. At the end of 2017, they made a decision like, hey, we're going to start raising rates. We're going to start reducing our balance sheet size. The economy's healthy. Things are going well. We're going to start reducing our balance sheet. And that was the whole Janet Yellen thing. And, obviously Trump didn't like that because he thought the market was going to lower. The market still went higher. We did have a lot of volatility in the market, but if you take a look here, this you can see how it's grown in size. But if we're looking in the last 3 months, you can see that the Fed has been back to its old ways, pumping money back in. So what's kind of interesting to me is we're at all-time highs here in the market. They cut rates and then they're pumping money back in. So it's just to be aware, as you can see, a pretty big reversal here. They went from 3.7 trillion back up to 3.8 trillion, and seems to be climbing. You can kind of play with this little graph here. I mean, we've been declining, you know, so they've been reducing the amount of assets that they have, and now they're back to their old ways of pumping that back up. So, you know, in the big scheme of things, it is below the 4.5 trillion that it was. However, I mean, if you look here, I mean, it went up quite a lot in the last year, last 6 months here. I mean, it's been climbing. I mean, compared to the last 6 months, it ripped a lot. I mean, they just pumped a lot in there. So, you know, feel free to go here, check it out every now and then. It does tell you a lot about, you know, kind of what the Federal Reserve is doing. I mean, they're obviously open about everything. There's no secret here, but you know, the question is, if they're pumping money back into the market, every time they cut rates, they've been tanking the market, which is the opposite of what they want to do. So things are pretty dicey. You know, before we get into the stock plays here, a couple news articles I wanted to go through as well here. You know, UBS sees potential for resolution in the U.S.-China trade talks despite current volatility. Chinese representatives in Washington to discuss trade ahead of next month high-level talks. So yeah, that's what I was talking about. They canceled their plans to meet with U.S. farmers. You have to look through these because there have been ups and downs of these negotiations. There's been a lot of volatility on both sides about these negotiations. I don't know why they think that there's going to be potential resolution. This is the whole thing with the trade war is they say there's bad news and then they try to pump with good news. I really think that this is a very wishy-washy article. You know, the real thing is going to happen in October, and if that gets called off or something happens at that meeting, we're in for a long winter. I mean, we could be making some money here. I'm not going to say it's going to be a bad thing. You know, volatility is good, but also be aware there's going to be like news pieces dropping left and right about the trade war and could kill your position, whether you're long or short. It could go either way. So just be aware of this. Also, not that I'm listening to Goldman Sachs, but there were some interesting things here saying stock volatility has been 25% higher in October on average ever since 1928. Big price swings have been seen in each major stock benchmark and sector over the past 30 years, with tech and healthcare being the most volatile groups. We believe high October volatility is more than just a coincidence. We believe it is a critical period for many investors and companies that manage performance to calendar year end. So that being said, you know, you can look it up, but you can look up the data. But October is a pretty volatile month. If you look at last year, if you look at last October on the S&Ps, you know, let's see here. Yeah. Let me reduce my size here so you guys can see the dates here. So you still can't see them. Anyways, I'll tell you what they are. So here's October 1st, October 2nd, October 3rd, and then starting October 4th, we had a major decline. This is what kind of started the whole thing. October 4th, last year, we pretty much bombed out, and we're coming back up onto the year one mark of the market changing forever. I mean, this pretty much ended the bull run and then basically sent in 2018 in the red. We ended the year in the red, and you know, how much is the S&P up this year? Let's see here. How much is the S&P 500 so far year to date? Well, I can't find it quick enough, so I don't want to waste your time. I don't want to waste your time here, but I don't think it's up enough. I mean, if we look at the last 2 years here, you know, we had a pretty crazy crime. So here's the start of 2018, and we climbed up pretty nicely. It got back up into here, up into the 290s, and we tanked, and we even saw 233 as a result. And then it took us all year pretty much slow grind all year to recover that. And we have until recently a little bit more volatility. So just be aware that we are, we're still in the 290s. It's kind of interesting to see that, a year has gone by and we're only like 6 points higher in the S&P. I mean, sure, we did recover a whole bunch, but a year has gone by. So if you bought SPY a year ago and you're still holding today, you're only 6 points higher. So food for thought. Which is probably why Trump is freaking out on the Fed, and he wants to make sure he has a good election before the next. He wants to make sure the economy is good before his next election. So, that being said, one of the things I'm looking for, SPY is we're back down, below 300. On Friday, we did say that we are sending troops to the Middle East due to the oil issue, that drone attack in Iran. So just be aware of that. There's going to be a bunch of Fed speakers, also not Powell, but other key Fed people are speaking as well. What else is going on this week? United Nations General Assembly is this week, and that is about it. That is about it for the week. So, it's going to be crazy. A lot of things are going on, both good. I want to say there's probably more downside. I mean, right now the futures are up. We have the Dow up 137, S&P's up 16, and Nasdaq up at 55. So that could just be a dead cat bounce, or maybe they're just trying to burn some premium at open tomorrow and drop it lower. But for me, I don't see a whole lot of upside. Earnings are pretty lackluster this week. I'm only looking at Nike and MU. Nike is Tuesday after close, and if you look at all these stocks, like if you're looking at Nike, I mean, it's pretty much just been tapping out up here and is back in this little consolidation area. Drop back below, try to break out, drop back below, and it's still making some lower highs in here. For Nike, last earnings, they did pretty well, but they pretty much haven't been able to get back out of this. They reached all-time high of 90. They haven't been able to break out of this, even though the market has been heading higher. Similar to MU, MU has earnings Thursday after close. MU sitting up here at all-time highs as well. Before I say all-time high, let me just double check here. Okay, not all-time highs. Not all-time highs. 52-week highs. 52-week highs here. They last got... What year is that? I can't see. 2018. So 2018, they reached a high of 64. So they have 52-week highs. And right now, it's probably just waiting. So for me, for earnings, I'm just going to be waiting to see if there's an opportunity after. I do like these kind of setups where like MU is up top here, and also Nike. I'm more of a support and resistance kind of trader, so these kind of setups are ideal for me. Both of these are very ideal for me. I'm not sure what they're going to report in their earnings, so we'll see what happens to the price action. And as you guys know, I do watch list videos throughout the week, and if this video is of value to you so far, I really appreciate you hitting the like button. Another stock that I'll be looking at, Apple as well. I've been watching this 220 area. It has been protecting the 220 area. However, it has closed at 217.73 on Friday. We had some pretty dramatic waterfall after that trade news has happened, because Apple is impacted highly by the trade news, along with like Nvidia. Nvidia got hit hard too, down $4. But right around this 180 area as well, is what I was looking at for it to break out. It did break out, but now we're back coming back down into this range here. It did break out from this previous high over here, and it looked like it was going to make another run up into like the 195s area, 190 area. But with all this China deal, all this China trade talk, Nvidia does get a lot of its revenue from China. So I'll be looking at that, and unfortunately all these charts are looking pretty bearish as well. Microsoft, you know, it has been trending up. It has been moving pretty slowly. It has been, the range has been pretty tight and it started to break out to the upside, except for now it's back into range here with this like 140, this 140 area. I did play puts off of 140 on Friday. Made a little bit of money, but you know, I'm looking for this to go above 140 before getting long here, because it needs to break above all this right here. Roku, one stock. Sorry, I wrote this down. Roku, I wouldn't be surprised. I mean, it did bounce off of 103 here. I wouldn't be surprised, honestly, if it can kind of consolidate it around this 100 area. I mean, it bounced. I mean, it dropped like $42 in a week, $47 in a week, almost $50 in a week, and at some point it's going to consolidate. It just can't keep doing that. Sure, it was a bit pump and dump here. You know, this looks, you know, very penny stock like, but eventually it's going to consolidate. We'll continue scalping it. I didn't have any huge wins on Roku. I was making like 30-50% on it, which was good on a Friday. You know, some people let it run thousands of percent, which you could, but for me, I stuck with my discipline. I stuck to scalping, just taking money at the top, because I was afraid that it could reverse anytime. Anything that goes down this fast could easily reverse that fast as well. So I just taking my time on it. I'm waiting for a little bit of consolidation. If it continues to head lower, I mean, if it breaks below, like, you know, if it heads to like 90, like 98, 97, you know, and then it goes, if it breaks 90, you know, it could definitely hit the 60s or 70s relatively easily. So, you know, we're going to keep an eye on that. Costco is another one that I've been trading as well. Hit all-time highs up here, and also is now descending back down into like the 280 range, where it was chilling for quite some time back in here. So I've been trading that a little bit. And then I've been trading also Home Depot as well. You know, all these are kind of look like they've just been hitting tops and just getting smacked in the face. So, you know, I'm going to see what the price action is. You know, I don't mind buying calls, but right now it's with the news and everything that's going on, and with the way the charts are looking, obviously it looks a lot bearish, but you know, the sentiment could change. There wasn't, up until now, there was pretty bullish sentiment. Trade talks were going well. Trump was being nice to China, and now that has seemed to shift. So just be aware that the sentiment is now different. Fed and all the stuff that's going on with the trade, and now things in the Middle East. So we'll see what happens. I'm not looking to jump in big. I'm not looking to get crazy with any trades. I'm just looking to make consistent returns, consistent wins. So if you watch this video to the end, comment below, say you watched to the end. Definitely appreciate you. If you like this video, hit the like button. And if you're not yet a subscriber and this was of value to you, hit subscribe. As always, stay safe, stay green. It's us versus herd.